Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Thursday, May 25th, 2023. Before I forget, please click like and subscribe. I'm going to jump to the Triple Q chart, the weekly Triple Q, the NASDAQ 100 ETF. Same formation on the NASDAQ 100 index itself and the NQ, the futures, 340.08. Long-term resistance. We have essentially tested it over the last couple of weeks, and this market, the Triple Q, remains susceptible to falling back into the 290s over the next several months. In fact, I am targeting the 290s over the next several months until this market closes above 340.08. If the Triple Q can close above 340.08 at the end of this week, and I think that is doubtful given what we're seeing right now, then we have longer-term bullish continuation in the NASDAQ 100. Remember, Apple comprises 10% of that index, and so it will have something to say about all that. We do nonetheless remain in the grips of a long-term buy signal. It remains valid and in effect above 170.85. We are bullish above 170.85. If we close below this formation by a 1% margin, especially tomorrow, Friday, end of the week, that is 169.14 or lower, then we have a long-term buy signal rejection, essentially a valid sign of weakness as we continue into later summer. I'm going to show you the daily chart here to indicate that you don't really have to wait for 169.14. Today it's 169.40. So we are bullish really through the rest of the year above 170.80. And if we close below 169.40, we are bearish well into the third quarter, the next 2 to 3 months, then expected to yield 150.67. So if we close below 169.40 and you bought those 183 or 220 out of the money calls, I think you may consider covering them and reaching for 160 out of the money puts that don't expire for at least 3 weeks, or 150, 151 out of the money puts that don't expire for at least several months. I think 159.75 could contain monthly selling pressures, and we could bounce off of here nicely, rotate back into the low 170s again within several weeks. That's why I give 150.67 a full 2 to 3 months to be realized if we close below 169.40. And keep in mind, closing below 169.40 is more importantly a settlement back below this significant long-term channel top that we settled above a month ago at 170.85. So the 170.85 formation, still solid bottom picking territory. In fact, on the daily chart, it held beautifully today at 170.53. Yesterday's low, that is Wednesday's low, 170.52. Still bottom picking territory. Now for the day itself. 172.62, still an intraday resistance level. That former channel top that we closed below a couple of days ago, it's just above Wednesday's 172.41 high, so that has pivot point qualities as well. I'd say above 172.62, expect 174.15. That is a 5/8 upside Fibonacci over the last 4 days where this market can top out for the day. If we settle today above 174.15, then we have a 3 to 5 day objective at 178.37. This channel top that performed very well over the last few weeks, still able to contain buying on a 2 to 3 day basis, and if settled above would then indicate that 182.94 all-time high within another 3 to 5 days. So it really is buying the 170.53 to 170.85 region, holding out for, on a day trade basis, 172.62, possibly 174.15 if we push through 172.62. And on a 3 to 5 day basis, by the end of next week, holding above 170.85, I do think we're right to retest this 178.37 channel top, where we can top out through the balance of next week. And once again, keep in mind that if we close today above 174.15, 178.37 is expected much sooner, within probably 2 to 3 days. I think that kind of covers the upside. I will mention kind of the big picture once again, that 182.94, that all-time high from last year, remains a 3 to 5 week objective above 170.85. Can contain weekly, possibly monthly buying pressures when tested, but I'm not expecting a long-term double top there in light of the recent settlement above 170.85, and it would be a settlement above 182.94 that would then likely yield 218.86 within another 3 to 5 months, which is a long-term objective anyway. So for trading above 170.85, you can still reach for those 183 out of the money calls that don't expire for at least a month. I'd go a couple of months out on that. Or If you're a longer-term options trader, you could buy 220, 230, or 240 out of the money calls that don't expire for at least a full year, because I think those strike prices are in play. By the end of the year, perhaps. Now, downside, once again, if we close below 169.40, which I showed just a moment ago, right here, all bets are off to the upside. Liquidate those out of the money calls. Reach for these puts, 160 out of the money puts that don't expire for at least a few weeks, 151 out of the money puts that don't expire for at least a few months. I think I pretty much said anything I say by at this point in time would be repetitious. I want to encourage you to check out wickedstocks.com. You'll have immediate access to the daily Triple Q and the daily SPY report, the S&P 500, the S&P 500 ETF, and the S&P 500 itself, and the ES, the futures, have all tested this long-term channel top. This market also poised for longer-term bearish continuation. Keep that in mind. I don't mean to shake you out of a long position, by the way, with Apple. It could be just a matter of time. We haven't sold off yet. It doesn't mean we necessarily will in the Q or the SPY. We have sold off a bit. We can come right back, especially with a debt deal, right? If we get a debt deal, I think it's a matter of a week or two before we would settle above these respective formations in those indexes. Anyway, I'll leave you with this. That's all I've got for Thursday's Apple Report. Please click like, subscribe, and check out wickedstocks.com.